Thank you very much. I appreciate that kind introduction. It is my pleasure to be here. I had the pleasure of getting connected with Heartland almost 20 years ago when my book, How to Fire the IRS, shortly after my book, How to Fire the IRS, was released. As Joe mentioned, I've written 11 or 12 books, 13 books, I forget how many. And all of my books, with the one exception, have focused on taxpayers' rights issues. That's my background. I've been a tax litigation consultant for over 33 years now. I help people with tax problems. I don't do tax preparation work. I get into the act after the IRS calls a return into question. Then I deal specifically with individuals and small businesses that are struggling with the problems of our tax system, whether it's a compliance problem, whether it's a payment problem, filling out the tax returns correctly, audits, collection situations, that sort of thing. In connection with my work, I've seen every kind of tax case you can imagine, and I've seen a few that you probably can't imagine. And the one thing that I recognize early on in my career is that the Internal Revenue Code is out of control, and as a result of that, the Internal Revenue Service is out of control. In 1992, I was struggling with the question, okay, what do we do about this? It's one thing to put these fires out here and there in individual cases, but what do we do to fix the problem? We have to do something to fix the problem, and it occurred to me that we need a different kind of a tax system. The tax system that we have right now does not work. The tax system is broken beyond repair. I want to talk about a little bit of that as we go on here this morning. We need an alternative tax system. And so I wrote the book, How to Fire the IRS, which sparked a national debate on whether we should abolish the income tax and the Internal Revenue Service entirely and adopt some other alternative tax system. And of course, my advocacy at that point was then, and continues to be now, the solution is some kind of a broad-based national retail sales tax. I have come to the conclusion that you cannot have freedom and an income tax coexisting in the same society. One must necessarily drive out the other. And my challenge to you is, which one are you willing to learn to live without? For myself personally, I'd rather live without the income tax than liberty. But I think that really is our choice here, and I think that's what the question comes down to, is what kind of a tax system is going to be antithetical to liberty and which one is going to nurture and embrace liberty. And as far as I'm concerned, the graduated income tax that we have now and has been a part of our culture since 1913 is the exact wrong way to do it. Joe mentioned the 10 principles of federal tax policy. It was my great pleasure to write this paper for Heartland. Joe and I talked about this in late 2000 or 2009 or 10, sometime in there, and I went right to work on it and got it out because it is an issue that touches everybody. You know, the thing about the income tax is not only does it touches everybody, but it touches every aspect of everybody's life. You know, for example, if you decide to get married or not, or get divorced if you're already married, that has tax consequences. If you decide to send your kids to this school or that school, that has tax consequences. If you decide to start a business or shut one down, that has tax consequences. If you decide to save or not save, that has tax consequences. If you decide to have more kids or children that you have move out of your house, that has tax consequences. If you decide to do this medical procedure or do that medical procedure, that has tax consequences. Everything that we do in life has tax consequences because of the reach of this income tax. And we have to structure a system that does not have that kind of reach into the individual lives of American citizens in this country. Our founders never intended the federal government to have that kind of reach and that kind of power and control of the lives of individual citizens in this country. And it's only the income tax that gives the federal government that kind of presence in the lives of all Americans. What I want to do here is just touch very briefly on the 10 principles. There's a couple of things that I want to develop a little bit more thoroughly. Some of the things I'm going to gloss over just because, the speech I put together is 3.5 hours long. When Joe said, come and talk about the income tax, I thought, well, sure, okay. A bunch of freedom-loving people in the room, 3.5 hours, that should be enough time to get the job done. Then he said I only have 20 minutes, so I'm going to have to edit as I go here. But what I want to do is I just want to run through the 10 principles very quickly. I want to start with principle number 1, which the first thing on my list was the idea of simplicity. We got to have a tax code that people understand. Citizens have a right to know what the law is. I would argue that tax compliance is a two-way street. You know, we have a responsibility as citizens to pay our taxes in full and on time, but the government has a responsibility to create a system that is easy to understand so people know what the law is. You know, the Fourth Amendment to the United States Constitution guarantees the right to due process. The Fifth Amendment guarantees the right to due process of law. One of the essential elements of due process of law is understanding what the law requires. When you've got a tax code that's so complicated that two people of reasonable intelligence can read the same provision of the code and come away with two completely differing understandings or versions as to what it means, we got a problem with the tax law. All right, now that's the complexity issue, but then we've got the scope of the law that's out of control. Our current Internal Revenue Code consists of about 4 million words. That's the closest count we can get. It's a tax code that consists of more of 4 million words, and it is so vast now that not even the Internal Revenue Service fully understands what the heck is going on with this thing. One of the things I quote in the 10 Principles paper is former Commissioner Charles Rosati. He was the commissioner of the IRS in the early part of the past decade, 2000s. He came into power in 1999. He was Clinton's appointee to clean up the computer mess that the IRS had at the time. And, you know, I don't know how that worked out. Rosati wasn't a tax guy. See, Rosati was a computer guy. So he comes in to fix this computer mess, see, and to make the IRS a more customer service agency. And I thought that was great because, you know, I grew up in a sales background. My father and my brothers are all salespeople. And I thought, hey, the customer's always right. So if we're going to be customers and the IRS is going to be a service organization, then we can easily solve the problem if the customer's always right. But they didn't buy that. So in any event, the IRS was wrong so often in the advice that it gives to taxpayers at the time, then Rosati was called to account for the reasons why the IRS could not give accurate answers to questions that taxpayers had about various laws. And here's what Rosati said. This was his answer to the question why they can't get it right. He says, fundamentally, we are attempting the impossible. He says, we are expecting our employees and our managers to be trained in areas that are far too broad to ever succeed, and our manuals and training courses are therefore unmanageable in scope and complexity. All right, so we have got a situation here where this code is so broad that the IRS is saying, not only is it difficult, it's impossible to do this job. Well, if it's impossible for the administrators of the law to do the job, what then does it say about uneducated, untrained Americans who are expected to comply with the filing requirements, the reporting requirements, and the payment requirements? And there's over 140 individual penalty provisions in the tax code that the IRS is ready and willing to slap you with when you do it wrong. Simplicity is a key issue. We have a right to know what the law is. We have a right to understand that law. And we have a right to a law that is simple to comply with. This current code is way past that. It's way past that. And the fact of the matter is that when you got a tax code and it's difficult to understand, that breeds non-compliance. You know, the Internal Revenue Service will turn the screws down every way it can on people who do not comply with the law. But the fact of the matter is, and former Commissioner Shirley Peterson made this statement. She was the commissioner in the early part of the 1990s. She made the statement that much of what we call non-compliance with the code is not non-compliance at all. It's misunderstanding. People don't know what their responsibilities are, and we deem that to be non-compliance, and that's wrong. People are punished for lack of understanding. That is an improper stance that the federal government is taking with respect to the tax code. My second point is non-invasiveness. You know, we should have a minimally invasive tax code. The General Accounting Office, formerly General Accounting Office, now the Government Accountability Office, once did an analysis of the burdens that are put on small businesses by the income tax. Now, interestingly, this analysis was done in the year 2000. So this was before Obamacare. This was before FATCA. This was before the American Taxpayer Relief Act. This was before the HIRE Act. This was before all of these changes that we've seen in the last 3 or 4 years. And the GAO estimated at that time that there were over 200 different burdens that were put on small businesses that were broken down into 4 different areas. I mean, we've got so many burdens here that the people just simply don't know what their responsibilities are, and now you introduce the complexity, and we've got a disaster on our hands. Point number 3 that I want to focus on is efficiency. You know, we've got to have a more efficient way of collecting taxes. The IRS would tell you, and as a matter of fact, the Treasury Department would tell you, and just about everybody in government would tell you that the IRS is the most efficient government agency that we have. I mean, look at what it does. Just for example, the agency is funded to the tune of about $12 billion a year. It's got about 94,000 employees. If they have their way, they're going to have close to 100,000 by the end of 2014. But right now they got plus or minus 93,000 employees. They're funded to the tune of about $12 billion, and they collect $2.5 trillion every year. That's about 50 cents of expense for every $100 collected. Well, that's the model of efficiency, isn't it? They would tell us it's the model of efficiency. But here's what they don't tell you, folks. 4 out of every $5 collected by the IRS is not collected by the IRS. Who's it collected by? Employers through wage withholding. They withhold the money from their workers' paychecks. They pay it to the federal government. The vast majority of self-employed people are responsible to make estimated payments 4 times a year. The IRS is not collecting that money. People are quote-unquote voluntarily paying it into the IRS. I like that term voluntary. The IRS uses the term voluntary often. It's the Vito Corleone approach to voluntary compliance. That's what it is. All right, if you're a fan of The Godfather, you know Vito Corleone held a gun to the guy's head and said either your brains or your signature will be on the contract. That's what voluntary compliance means. You either do what we tell you or we break your thumbs. That's how it works. But the fact of the matter is these people are paying this money in to the Internal Revenue Service. They're not collecting the money. The National Taxpayer Advocate pointed out in testimony before Congress in April of this year that the IRS's fixation on enforcement is misplaced. They always go to Congress and say, we need more money, we need more equipment, we need more manpower to generate more enforcement. The fact of the matter is over 98% of every dollar paid into the Internal Revenue Service, paid into the federal government, is paid in voluntarily by people who are doing what they think they're supposed to do. The IRS's enforcement activities are responsible for less than 2% of the revenue. So it's misplaced. So we've got an inefficient system. And here's the other thing that we need to focus on. This money that we're talking about here, this 2.5, 2.4, whatever it is, trillion dollars that's collected, is collected from over 250 million different collection points. What do I mean by that? There's over 130 million individual tax returns filed. There's over 120 million business tax returns filed. Keep in mind that each business that files one tax return, income tax return, is responsible to file 5 employment tax returns. 4 941 forms for their employees and 1 940 form. Those are for the employment taxes. So businesses are filing 6 tax returns, and this is the true measure of the collection points that we're dealing with under this tax system. 250 million different collection points, and that, my friends, is the model of inefficiency in my mind. We have got to create a system that is much more efficient, and the fact of the matter is, if we go to a broad-based national retail sales tax that the states are responsible to administer. In other words, the states collect the tax piggyback with their own state sales tax. 45 of the 50 states out there already have a state sales tax in place, so it's be no additional burden for the businesses that are already functioning this way. The federal sales tax is collected piggyback with the state sales tax. Now what we do is we reduce the number of collection points from 250 million to just 50. Not 50 million, just 50, which of course is the number of the states in the union. Now I did a study on this issue for the state of Minnesota. I was approached by the leader of the Republican caucus in the state of Minnesota about 10 years ago to do an analysis for the state of Minnesota as to what it would look like if the state of Minnesota moved away from an income tax system into a broad-based sales tax system. Minnesota's got about 3 main tax systems that run in the state: the federal, the corporate income tax, the personal income tax, and the sales tax. And here's what my study revealed, is that the state could have expected to achieve an 82% reduction in the number of collection points, annual savings of at least almost $5 million in return processing costs, an 88% reduction in the number of taxpayer questions that were asked of the state, a reduction of 63% in the state tax return filing obligation of the average Minnesota business, and an overall reduction in the state's administrative costs of about $38 million. Well, you know, this was in 2000 I did this study. That was real money back then. It doesn't sound very impressive now, but that was real money in those days. And the fact of the matter is that there are massive savings to be had by going to a broad-based retail sales tax system. Another point that I want to focus on here for just a minute is this idea of stability. This notion that the tax laws should be stable from generation to generation. I talked earlier about a simple tax law, that we should be able to understand what the law requires us to do, and we should be able to comply with those requirements easily. Well, we also should know, we should have the privilege of knowing, the right to know, that the law, what the law is today is the same as what the law is going to be tomorrow. The fact of the matter is, folks, that we have got a tax law that is stirred so many times that nobody fully understands what this code is like. I remember back in the 1990s, Money Magazine used to do a study. And they would take a hypothetical family financial profile to 50 different tax preparers in the private sector. And the charge was very simple. Prepare the tax return for this hypothetical family based on these facts that we give you, and let's see what the tax liability shakes down to. 50 different tax preparers would come up with 50 different answers, and they did it in every single study. All right, now the last time Money Magazine did this was plus or minus 1996-97. In this case, they had only 48 preparers because the only two with any sense dropped out before the thing was finished. See, and so, but the thing that was amazing about the last study was not the fact that 48 guys came up with 48 answers. That was predictable. What was remarkable about it was the range. On the low side, the tax liability was plus or minus $13,000, and on the high side, it was $46,000. All right, these people were not only not on the same page, they weren't even in the same book. And yet one of the reasons for this is because of the tax law changes. You know, during the decade of the 1980s, we saw maybe 3 or 4 major tax law changes in that entire decade. 1991 was the Tax Equity and Fiscal Responsibility Act that shifted the Social Security cards around the table extensively. And then, of course, we had the 1986 Reagan Tax Reform Act that was a move toward flattening the tax, dropped it down to just 3 rates. And there was a couple of them in between. All right, so 3 or 4 major tax law changes in 10 years. In the decade of the 1990s, Congress picked up steam quite a bit. In the 3 years just between 1996, 7, and 8, there were 4 major tax law changes that changed over 750 code sections and subsections, and Congress was just getting warmed up. By the decade of the 2000s, from 2001 to 2008, there were over 3,200 tax law changes, with 500 of them coming in 2008 alone. Folks, and that's not even the worst of it. The worst of it is during the decade of the 2000s, Congress instituted a new type of tax law to the discussion, and that is the concept of temporary tax provisions. There were over 50 different temporary tax provisions that were introduced into the Internal Revenue Code in about 2001, 2002. Temporary provisions, expiring provisions, phase-ins, phase-outs, retroactive tax laws, laws that were passed today that were made to apply to a year prior or years prior. What is this? What kind of stability does that impart to society? Zero stability. As I said before, the tax law touches every citizen and every business. Every decision you make has tax consequences. Do I save money or spend it? Do I get married or not? If I'm married, do I get divorced or not? All of these things have tax consequences to them. We have a right to know as citizens what the law is going to be tomorrow, so we can structure our affairs today in a manner that will suit us in the future. And we cannot do that under the current tax system. The fact of the matter is that the changes in the tax code are out of control. And when you compare this history of change with the Internal Revenue Code to what happens under a broad-based sales tax, it's remarkable. For example, in the state of Minnesota, our income tax changes, of course, are swung around by the tail by the federal government because Minnesota piggybacks itself with the federal system. So every change that the federal government makes, the state of Minnesota's got to get in line behind it and do all of that madness as well. But when you look at the sales tax in the state of Minnesota, which came into being in 1963, you can count on one hand the number of changes to that sales tax law over that period of time. It's stable. And one of the reasons it's stable is because it's visible. And that brings me to my next point, point number 5, visibility. People know what the tax is. They see it when they go to the store and they buy something and that tax is tagged onto the bottom line. They automatically know what the vultures on the hill are taking from them. It's apparent to even the most casual observer what the cost of government is when it's built into that sales tax bottom line. Under our current tax system, people have no idea what this government's costing them. They have no clue. And in my work, I see this all the time where I'll talk to folks about their tax liabilities and, what happened this year and what happened that year. And I'll commonly ask folks, how much did you pay in income taxes last year? And they'll tell me, what, I didn't pay anything, I got a refund. Oh, really? You didn't pay anything? Let's see your W-2 form. Everybody knows what a W-2 is, right? That's your wage and tax statement that your employer gets you, shows you what the withholding is. I say, how much was your refund? Well, I got $1,000. Really? $1,000 free dollars from the government. What a great thing. I'm looking here at your W-2 form. Your W-2 says that you had $5,000 worth of wage withholding, and you tell me you got a $1,000 refund. Let me ask you again. How much did you pay in taxes last year? Oh, gee, I guess I paid $4,000. Yes, I guess you did. People don't see it because it's hidden. And the most hidden tax we have in this country is the Social Security tax. The average taxpayer pays more in Social Security taxes at 7.65% assessed against the wage earner than he does in income taxes, the lowest rate of 10%, because it's on the first dollar. But nobody goes through a Social Security tax audit. Nobody files a Social Security tax return. Nobody has to do any Social Security tax compliance. Of course, employers do, but not wage earners. It's taken right out of their paychecks. They never see it. All of the wage earners in this room, you think in terms of what? My net take-home pay. You don't look at the top line, where the top line doesn't mean anything on your paycheck. It's the bottom line. All right, so the taxes are invisible. People don't know what they pay. But when you've got a broad-based sales tax, and that sales tax is assessed on the bottom line, everybody knows what the cost of government is. And it's important to understand what the cost of government is, because too many people think it's free. Too many people think that it's just this gravy train of free benefits, and it's not. And it's not. And the fact of the matter is, when you've got hidden taxes, it is very easy to raise hidden taxes and then blame the increased cost of living on something else. Whether it's big medicine, or the big pharmaceuticals, or the big tobacco, or big this or big that, when in fact the blame lies almost exclusively and almost 100% with big government and no place else. We have to have a visible system. Point number 6 on my 10 principles is neutrality. The taxes can't fall more or less heavily on one segment of society or another. Number 7 is taxes have to encourage economic growth. We have to have a system that does not burden the engine of growth. Here's a basic economic principle that you need to understand, folks, and that is this. What you tax, you get less of. And what you subsidize, you get more of. When we tax savings and production and investment and growth, what are we going to get less of? Savings, production, investment, and growth. It's as simple as that. It's just as basic as that. We have to take the boot off the neck of economic prosperity, allow the engine to function at its maximum passable RPM, and allow everybody to have an opportunity to grow and prosper in our society. You can't tax the things that are necessary for people to achieve economic growth. You can't do that. You got to put the burden someplace else. Now, the reality is this, folks. There's no tax system that's painless. Every tax system creates what economists call distortions. All right, a distortion is something that causes you to do something you otherwise wouldn't, or prevents you from doing something you otherwise might do. All taxes cause distortions. So I'm not naive to think that just because we move the tax base from an income base to a consumption base that there's not going to be distortions. There are. But the question is, where is the least amount of damage done? And the least amount of damage is done by burdening something other than that which creates economic stability, economic growth, and economic opportunity. And that is precisely, folks, why the founders specifically rejected. It was not a decision of omission. They specifically rejected income taxes as the means of funding the new government because they recognized that they could not burden the engine of growth with these tax systems where the new government needed to create a stable and sound economy to build on. And so they rejected them overtly and deliberately. Point number 8 is that the tax has to be broad-based. A broad-based tax system keeps rates low. Economists will tell you that you don't raise taxes by raising the rates. You raise the taxes by spreading the base. And so when we spread the base, we have the opportunity to keep the rates low. But the fact of the matter is, folks, we're doing the opposite with the income tax. we got fewer and fewer people in this country that are paying a greater share of the taxes. All right, there's fewer and fewer people. In fact, you probably have heard, maybe some of the people in this room don't believe this, but you might have heard the saying or the pitch that says rich people pay no taxes. How many have heard that? Rich people pay no tax. Rich people don't. We've got a governor in the state of Minnesota that was elected on the proposition that rich people don't pay enough taxes. They don't pay their fair share. Well, folks, the fact of the matter is that rich people pay all the taxes. They pay all the taxes. One of the points that I make in the 10 Principles paper is this analysis that comes right out of the Treasury Department. These are Treasury data. These aren't numbers that some right-wing lunatic think tank came up with. These are Treasury data that indicates who's paying what. Taxpayers in the top 20% of the income distribution pay 70.6% of all federal taxes, while taxpayers in the bottom 20% pay less than 0.5%. More than half of federal taxes are paid by taxpayers in the top 10% of the income distribution. All right, taxpayers in the lowest two quintiles actually receive more in refunds from the federal government than they pay in taxes. And these are coming through these refundable tax credits, like the earned income credit and the child credit and these various other credits that are refundable. Of course, we got a new credit now. We got the health insurance credit. That's going to be another refundable credit. All right, these things are shifting the burden of taxation. They're shifting the base away from the lower income citizens to the higher income citizens. And here's what the real danger of that is. It's what I call the Disney World syndrome. And the Disney World syndrome works like this. My wife and I, Jean, this is my wife Jean over here, the pretty one. Not Joe. Pretty one. We raised 4 kids. Now I want you to imagine if we had to have a Democratic vote every single month to determine how the family resources were going to be allocated. All right, let's have a Democratic vote every single month. All in favor of paying the mortgage payment, raise your hand. How many hands go up? 2 hands. Mom and Dad's hands go up. All in favor of Disney World, raise your hand. What do we got? 4 hands go up for Disney World. 4 hands go up for Disney World. All right, we'll go to Disney World again. You know, so we're 13 months into this. Kids, come on, we're in bankruptcy here. What's bankruptcy? Dad, I want more popcorn. You know, they just, when people don't have skin in the game, it doesn't make any difference to them what the costs are. All right, so the evil of spreading this base, of focusing the base so narrowly is not just that you're unfairly burdening one segment of society at the expense of another. You're taking entire segments of the population away from the element of having skin in the game. You've got to have skin in the game if you're going to keep costs down. People have to know that these quote-unquote benefits that they vote for are going to cost them something. And you don't have that with this income tax that has been so refined over these years. And this is the advantage of a broad-based retail sales tax system where everybody has a responsibility to pay something to the support of the government. That is just, in my mind, a fundamental principle. Point number 9 is equality. You know, everybody should be treated equally under the law. Has anybody heard that saying before in the United States of America? Am I the only one that remembers that we all should be treated equally? Abraham Lincoln stated that the crowning jewel of American liberty is the concept that everyone is created equal and everybody stands equal before the law. Who would dispute that proposition in these United States? Nobody would. Nobody with any sense would suggest that we shouldn't have equality under the law across the board, except when it comes to the income tax. You see, folks, in every other area of the law, invidious discrimination is condemned as it should be. But when it comes to the income tax, not only do we not condemn it, we embrace it, as though it's some sort of moral high road to steal that from people that which they have peacefully and lawfully earned and distribute it to somebody else. You see, this is what the income tax law. We've got a tax law that is based almost entirely on your social standing in the community. And the law treats you differently based on your social standing than it does to other people. There are 6 different definitions of the word child in the Internal Revenue Code. You know, you'd think they could simplify that at least. But no, there's 6 different definitions of the word child in the Internal Revenue Code, all based on your social or economic standing. The income tax brackets themselves, the 6 different brackets that we have today, are completely arbitrary And they determine your tax liability based only on your social, on your economic standing. So different people with similarly situated people are treated differently under the tax law simply because of their social or economic standing, which is just completely arbitrary. The tax brackets that we have in our tax system today are not based on any economic principles. They're not based on any constitutional principles. They're not based on any defensible moral principles. They are just simply arbitrary. And the deluge of rules and regulations that we have under the Internal Revenue Code are completely arbitrary, most of them based simply on your social and economic standing. So people are treated differently just because of their social status, and we would not tolerate this in any other area of the law. I want to share something with you that goes all the way back to 1913, when this income tax was being debated in the United States Senate. The question then was, how do we set this up in terms of our structures? They agreed that we're going to have this graduated income tax, but what are the rates going to be? At the time, North Dakota Senator Porter McCumber was speaking on the Senate floor, and here's what he said: Mr. President, it is quite evident that no two senators will agree upon the number of steps in the sliding scale of this bill, and it is equally clear that no two of them will agree upon the ratio of rate for each particular step. And the reason for that is because the rates and brackets were then and are now arbitrary. They are arbitrary. And no other area of law would tolerate that, folks, and yet we embrace it in the Internal Revenue Code, and I, for one, simply cannot understand how that happens. The last point, and then we'll have some time for questions, right, Joe? The last point, point number 10, is the tax code has to be based on constitutional principles. This could be number 1 on the list unless you save the best for last, in which case it would be 10. The Constitution of the United States gives the federal government, the Congress of the United States, very limited taxing authority. Article 1, Section 8 gives the Congress of the United States the authority to levy taxes for 3 narrow purposes. Any of you hotshot, know-it-all, liberty-loving people know what the 3 are. All right? Let's go through it very quickly. Number 1, to pay the debts of the nation. Congress has the authority to raise taxes to pay the debts of the nation. All right, no question about that. Number 2, to provide for the national defense. And number 3, and this is the tricky one, this is where it gets a little hairy, is to provide for the general welfare. Well, what does that mean? What does general welfare mean? Well, all we need to do is create a welfare program, and now we can fund it through taxation, right? Folks, at the time of the founding of the Constitution, at the time of the writing of the Constitution, the founding of America, our leaders never would have thought of government payment programs in terms of welfare. They were then, and right up until the 1950s, they were referred to as public relief programs. The term general, the phrase general welfare has a very specific meaning to it. And the founders were adamant as to what that meaning was. There was some debate as to the breadth of the concept, but they knew what the meaning was. And the meaning was that in order for a program to be legitimate under Article 1, Section 8, it had to benefit the nation as a whole. General being read to encompass everybody. Not one segment of society at the expense of another, not one business at the expense of another, not one social concept at the expense of another. If the program didn't benefit everybody, then it could not be funded under Article 1, Section 8. And as a matter of fact, early Supreme Court decisions, back in the days when the Supreme Court could read, the early Supreme Court decisions talked about this, and they narrowed and they honed in on this concept. And in the Butler case, United States versus Butler, talked about this, and I quote the case on page 34 of my paper here, the 10 Principles of Federal Tax Policy. And here's where the court ruled that a tax in the general understanding of the term, and as used in the Constitution, signifies an exaction for the support of the government. The word has never been thought to connote the expropriation of money from one group to benefit another. And yet that's what our tax system has devolved into. A giant transfer system where the fruits of the labor of the people who earn the money peacefully and lawfully are taken to support the non-productive activities of somebody else. Well, but don't they need the help? Maybe they do need the help. That's not the question. The question is, does the tax system and the federal government authorize the taking of resources from those who have earned it to give to those who have not earned it? Under the federal system, the answer is no. There's no constitutional support for it. There is not. And I'll tell you something, folks, as long as we've got a significant component of our population with the right to vote that can vote for benefits that they don't have to pay for, there is no amount of money that will be sufficient to pay for those needs. And there will be no tax system that any mind of man can conceive that will be sufficient to raise that revenue without breaking thumbs. And that's the point that we've reached. That's the place that we've come to. We've got an Internal Revenue Service, as I said, that consists of about 93,000 people, and that's not enough. They want it to be closer to 100,000 by the end of the year. Obama's quote-unquote budget, if you can even call it that, is looking for funding closer to $13 billion than the 12 that they're at now. They're constantly calling for more resources, more manpower, more equipment to enforce the tax law because of this growing belief that more and more citizens are not complying with the law. And of course, they're confusing this lack of compliance with lack of understanding. That's another matter. We've addressed that. But the fact of the matter is, folks, that as more and more Americans are forced to make a choice between paying their taxes and feeding their families, they're going to choose to feed the families first and foremost every time. And our Congress and the administration does not understand that. It's time for a change, a fundamental change. There's a lot of debate. Do we want this system? Do we want that system? How about a flat income tax? A flat income tax is still an income tax. And remember the proposition that I started with. You can't have a liberty and an income tax coexisting in the same society. One must necessarily drive out the other. My challenge is, which one are you willing to learn to live without? The end.
Questions. I would ask the first one. You're going to run for president of the United States? I'll take that to be no.
Ask Gina.
Permission
you want to be
denied?
Gina, you want to be the first babe or what?
But I have also a question, a more serious question, I suppose, on the national retail sales tax. Wouldn't that have to be 20% on top of our current tax?
It would have to be higher than that, probably. If you're going to have a quote-unquote revenue-neutral tax, it's going to have to be 23, 24%. Some argue higher than that. You know, the arguments for higher than that. You know, there's some basis for it, but I'm not sure how clear the basis is. The fact of the matter is, it would have to be north of 20%. And people say, well, good Lord, a sales tax of 20% on top of the state taxes already, you know, that would be crushing. But the fact of the matter is, people are already paying, the federal tax burden already is higher than 25%. It's closer to 30% for most people. The current federal tax burden. So, you know, when you broaden the base to all consumption goods and services, you can actually lower the rate and collect the same amount of money. But see, this is where the problem of crafting an alternative tax system comes in. How much money do we want? Well, the left would argue that there's that all the money is theirs anyway. All right. I mean, the problem is, in my mind, the challenge is we want people to be outraged by this level of taxation. People don't know what they're paying right now. The typical American has no idea what the cost of government is. They have no clue what it is. They think these benefits are free, and we know they're not free. All right, so when people see this cost of government, who do they blame for that? They can't blame big tobacco. They can't blame big automobile industry. They can't blame big pharmaceuticals. They have to blame big government, because that's who set the rates. So it's not a good answer. I know it's not a good answer. The problem is, it's not a good answer. But it's the reality. They're taking too much money, and it's got to stop. How do you stop it? I don't know. I don't know how to do that. So that disqualifies me, because presidents are supposed to know everything, right?
The argument against that people have made against a retail sales tax is that it's disproportionately paid by the poor. how do you
Well,
respond to that?
what they say is it's regressive.
Okay.
All right, they say the argument is, well, it's regressive, it falls heavilier, write that down, heavilier. It falls more heavily on the poor than it does on the rich. And the fact that, and they say that we need a progressive tax system, like ours is progressive, see, this current tax system, falls more heavily on the rich than it does on the poor. The fact of the matter is the sales tax is neither. It's not regressive, doesn't hit lower income people harder. It's not progressive, doesn't hit higher income people harder. It's proportional. All right, what that means is the tax falls on all citizens in proportion to their spending. Lower income people pay less taxes. Why? Because they spend less money. All right, the lower income person goes to the car store and he buys the Geo Metro for $11,000. The higher income person pays more taxes. Why? Because he spends more money. He goes to the car store and buys the Mercedes SL 500. He pays more taxes because he spends more money. The tax is not regressive and it's not progressive, it's proportional. It is precisely the model the founders intended. It's precisely consistent with the model of liberty. Question back here.
What does the National Retail Federation think of a national sales tax? And more interesting than perhaps the internet world, is it possible a sales tax is something that may also have downsides for liberty?
Well, listen, there's downsides to every form of tax system. As I said before, there's no perfect model. Every tax has distortions, creates distortions. Every tax burdens this or burdens that. I mean, that's just inescapable. All right, so there's no question about that. Here's the question we got to start. We got to stop asking the question of how this helps me personally. We got to start asking the question, what's the best model for America overall? You know, one thing that I learned in this last election, we all heard the phrase that all elections are local. All you activists, you've all heard that phrase. All elections are local. All politics are local, right? Everything in politics is local. This last presidential election taught me that it goes deeper than that. All elections are not only local, they're personal. The issues are personal. And I'll tell you what, for the last 50 years, the left has done a pretty good job of personalizing the election by asking the question, what's in it for me? And then answering that question, well, you get a free cell phone, you get free health care, you get free this, education, free da-da-da-da-da, all these free things. That's what's in it for me. All right, but we on this side of the fence, we are poor at communicating this idea of what's in it for me. Well, why is liberty a better idea? Why is liberty a better idea than socialism? Is it a better idea for you to have the control over what happens with your family, with your health care, with your education, with your retirement, with your business? Isn't that a better idea than abdicating that control to some bureaucrat in Washington who doesn't know or care about you and your family? How is that not a better idea? All right, so we got to focus in not on these narrow questions of what's in it for me from the viewpoint of the left. We got to broaden the argument. We have to broaden the argument and teach people why liberty is a better idea. And as far as these these special interests are concerned, well, nobody wants their own special interest hit. I know that. I understand that. And that's why there's no perfect formula here. But the question is, what is the better idea for promoting liberty? That's the question. That's the best I can do.
Yeah, I'm a CPA, but early in my career I was in the tax department and decided I didn't want to spend my life trying to determine what the IRS wanted us to do. How about if we set up a system where people work and we go ahead and we do a transfer of income from them to people who have higher standards of living than they do? I think that would be a good system. That is the system that we have with Social Security. It is a pure and simple tax. It is just like an income tax. And until people understand that is the truth, there is no trust fund, you aren't paying into it, it's a pay-as-you-go system. The federal government is not liable to pay you any Social Security or Medicare benefits beyond the checks that are currently written. I don't think Social Security can be changed until people understand that.
No, you're exactly right. And when I talk about altering the tax system, I'm not thinking in terms of altering the Social Security system. When I say, my fantasy model of a tax system is to take all 5 taxes that exist at the federal level, the 5 major taxes, the personal and corporate income tax, the estate and gift tax, the social security tax, and the unemployment tax, those 5 taxes raise 98.5% of every federal dollar raised. The other 1.5 is insignificant sources from impost duties and some few manufacturers' excise taxes and a couple of Mickey Mouse little things, all right? If you take those 5 taxes and eliminate all of them and replace it with one comprehensive sales tax, all right, now you've got a tax system. But that we eliminate the Social Security tax, but not the benefit program. The benefit program has to be addressed someplace else. All right, it has to be addressed someplace else, and it's a separate question. And you're exactly right. People think they got the savings account in Washington with their name on it. They don't. I mean, if you read the Internal Revenue Code, which clearly you have, if you read the Internal Revenue Code, you find that the Social Security tax is nothing more than an income tax that attaches to the first dollar of income, actually at the $401st, because the first $400 are Social Security tax exempt, all right? So it attaches to the $401st of income up to the Social Security cap, whatever that happens to be, $109,000 plus or minus right now. And the money's paid into the general fund. That's right in the law. It's paid into the general fund. There's no savings account in Washington with your name on it. And in order for you to get Social Security, once you have retired and you've made your application and you get your check, you got to live to the next month to get another check. There's no asset there that you can pass on to your heirs. There isn't. And that's a whole other diabolical issue, no question about it. Go ahead, sir.
You mentioned that whatever tax we adopt, there'll be distortions. Based on your favorite tax, the retail tax, what do you foresee as possible distortions that might come with that?
Well, the first thing that people talk about, and this kind of pulls on this string over here that this gentleman laid out. Obviously, it's going to have some effect on retail sales. There's no question about that, because if you're going to tax retail sales, you're going to potentially limit retail sales. And people say, they say, well, nobody's going to spend anymore. Well, first of all, that's silly. The idea that nobody's going to spend. I mean, come on, you guys with wives, that's ridiculous. No, I'm just kidding. That's just a joke. Lighten up. So, I mean, the idea that nobody's going to spend is just simply frivolous. But even to the extent that there is increased savings, and the fact of the matter is the economic numbers indicate that the national savings rate increase under a retail sales tax, which is a good thing, because it just builds the capital pool that's available to fund business lending so that businesses can expand with equipment, people, and inventories and resources, right? So that's a good thing. But the question is this: why do people save money? Simple, fast answer. Why do people save money? Exactly right. People save money today to facilitate spending tomorrow. Now, you got three kinds of savings. You got short-term savings for short-term type things. I'm going to save to go on vacation next year. You got medium-term savings. I'm going to save for the next 5 years to buy a house. You got long-term savings. We're going to save for my retirement. But at the end of that savings trail, you have what? Spending. 100% of the time, the savings trail ends with spending. And even if, God forbid, you die before your money's gone, now who spends the money? Your kids. And you think they're going to save it? Not a chance. Not happening. All right. Are we getting the high sign here, or do we got more questions? Go ahead.
I have this mantra that I always tell people about taxes, and that is very simply, because you said taxes influence every aspect of our life, taxes affect people's behavior. And I don't understand why politicians seem to think that they can raise taxes with impunity when the Wall Street Journal has written numerous articles that, especially in Maryland, when they raised the tax, they never collected the money they thought they were going to, because my supposition is one of two things happen. Either people manage their income to be below the millionaire tax, or they left the state.
Right.
Would you comment on that?
Well, the answer is it's not that they don't know it happens, they don't care. All right? The fact is they do know. They know better than you do what the dynamic impact of tax policy is. They know it. And I evidence that in my 10 principles paper under point number 6, neutrality, right there, neutrality. I talk about the so-called luxury tax. Does anybody remember the luxury tax? The 10% tax, that was the tax that cost George Bush Sr. his job. Remember the promise, no new taxes, read my lips. Remember that nonsense? Well, of course, he got cornered into new taxes for the purposes, of course, balancing the budget. We got to balance the budget. We can't possibly cut any spending to balance the budget. Forget that. We need more revenue to do it with, which is the evil of a balanced budget amendment. That's another topic. So they passed. So they create this luxury tax, and the luxury tax was this secret plan to sneak up behind millionaires and clobber them over the side of the head right while they were in the act of being rich. Okay, see, because here's what was going to happen. They were going to put this 10% excise tax on luxury automobiles, on jewelry, on boats, on furs. There was a couple other things, handful of items. All right, and if you bought jewelry in excess of so much money, then there was this 10% tax, and boats and so on and so forth. Well, that didn't work out so well, and the reason is because while you could tax the pants off of somebody for engaging in a particular transaction, at least up until this point in the law, they couldn't force anybody to engage in a particular transaction. So you could clobber these people right in the act of being rich, but you couldn't make them spend the money, see? And so what did they do? They didn't spend the money. They didn't spend the money. And so it decimated the boat building industry in the United States of America. It still hasn't recovered to this day. And jewelry business suffered. A lot of businesses around the country suffered in these areas. And in 1993, they repealed it. In the support of the vote to repeal, the House Ways and Means Committee said this: during the recent recession, the boat, aircraft, jewelry, and fur industries have suffered job losses and increased unemployment. The committee believes that it is appropriate to eliminate the burden these taxes impose in the interest of fostering economic recovery in those and related industries. All right, so my question is, why not take the burden off of all industries? Does that answer your question? All right, go ahead, sir.
I have, that's, by the way, my comment, that's an appropriate, when you're talking about the IRS, and you get that music in the background. Okay. My question is this.
If you'd come to me in friendship in the first place, the scum of whom your daughter would be suffering this very day. And if an honest man such as yourself should make enemies, then they will become my enemies. They never fear you.
That's what I say to a client when he says, I don't understand. I went to this other tax pro and I did this.
If you come to me in friendship in the first place.
My question has to do with, I'll make up a word here, you were making up something.
I only made up one, not some, one. I made up one word. And then I corrected myself.
What is the doability of this? I mean, we're sitting here talking about, there's three systems, right? So you got the current system, okay, nobody in this room wants that, I'm pretty sure. Then you've got a flat tax, and then, which obviously is not your preference.
Right.
And then you have the sales tax. And there's smart guys who would agree with just about everything you said, like Dan Mitchell, for instance, at the Cato Institute, who would prefer the flat tax, even though he likes the sales tax. And I can't speak for Dan, but based on the doability thing. In other words, how are we going to move there? And in some fantasy world where we could get rid of the current system, what's the doability of the system over to the one that you like?
Well, that's a good question, and that ultimately comes down to the bottom line is what is politically doable. When we were having the flat tax, sales tax debates in the 1990s, and Dan was involved in that stuff, Cato Institute was involved heavily. I worked with Cato quite a bit on this stuff back in those days, and we were debating this stuff everywhere. And ultimately, the flat taxers would concede the advantages of the sales tax in this area, in this area, in this area, but it's not politically doable, they would say. They say what is politically doable is a flat tax, and if we can just move to a flat tax, we can start to get this under control. All right, is it politically doable? Here's where I'm at with this right now. Back in, when I wrote that book in 1992, How to Fire the IRS, was released in 93, whenever it was. I was laboring under this delusion that Congress was going to come to its senses at some point and do the right thing for the right reason. They were going to recommend they were going to recognize what a great idea this was, and how much more sound it was from all vantage points, economically and constitutionally, and all these reasons that we lay out here. They would see that and come to their senses and recognize that if we trash the system we have now and go to this alternative system, it's going to be so much better. Well, you know, that didn't happen. All right, they didn't come to their senses. I mean, that assumes they have senses to come to, first of all, which was my first mistake. All right, but here's what I'm thinking now. Congress is never going to do the right thing for the right reason. They might stumble onto doing the right thing someday for some other motivation. And here's what I'm thinking with respect to the tax system. We're going to see a fundamental change to this tax system when our current system becomes unenforceable. I said earlier that we've got, when people are forced to make a choice between paying their taxes and feeding their families, they're going to opt to feed the families first and foremost. Well, I guess I got news for you. There's more people in trouble with the Internal Revenue Service today than ever before. All right, last year alone, the IRS issued over 4 million tax liens, almost 4 million, north of 3.5 million wage and bank levies, third-party wage and bank levies, and property seizures. All right, we've got about a 350 or 370, depends who you ask, $1 billion tax gap, difference between what's owed and what's paid, and that's growing. Just to put that in perspective, in 1990, the tax gap was reported to be under 100 million, about $94 million, and it drove them crazy in Washington. The idea that we got this $94 million out there that's not collected, it drove them crazy. And it set the Internal Revenue Service on a warpath, which ultimately led to the Restructuring Act in 1998. The IRS was out of control for almost 10 years because they're chasing this phantom $94 million. Well, now we got 5 times that much on the books today. And so what's happening is as the tax becomes more and more unenforceable, and it eventually reaches the point where it is or becomes unenforceable, that's when Congress is going to have to sit down and rethink this. Why did the prohibition laws get repealed? Did Congress come to its senses and say, oh, we got to repeal these things? This is stupid. No, they were unenforceable. They were unenforceable. And to the extent that we're getting to that point with the income tax, that's what's going to ultimately drive the debate. Now, here's my real problem, one of the real problems that I have with this doability argument and the flat tax. And I understand that there's some advantages to a flat tax, and I get that it's not a fundamentally crazy idea. I understand all those things. But I say to myself, we got one chance. We're going to have one chance to fix this thing. It seems like to me. I could be wrong about this. I'm willing to be wrong about this. But it seems to me we're going to have one chance to fix this. If we got one chance to fix this, what solution do we put on the table? The one that's second best? I don't think so. That's just me. Go ahead, sir.
What might the rate have to be on sales tax, saying we don't reduce any expenditures? And the other thing I wanted to know is, does the velocity of money have something to do with how much money's going to the treasury?
Well, first of all, as far as the rate's concerned, the fair tax, which is the bill that's in Congress right now, was it HR 24, 25? That's the bill that's in Congress right now to adopt the retail sales tax. I got some problems with that bill. You know, that doesn't matter. Forget all that. Their rate is 23%. All right, they think that they think that a rate of 23% would do the job. As far as velocity of money, you got that comes into play in determining the amount of money that Washington gets. There's no question about that. Money spins around in the economy. We all know that. So go ahead, sir.
What is your opinion of a value-added tax?
I think it's a bad idea. I think it's a very bad idea. First of all, value-added tax is a very complicated and cumbersome. For those of you who don't know, value-added tax is a very complicated and cumbersome excise tax that's imposed at the manufacturer level on every product as it moves through the various phases of manufacture. For example, how did this start out? This little pamphlet right here began as what? A mighty oak tree, right? It started out as a mighty oak, actually probably an ash tree, but it started out as a tree in the forest someplace. So when the logger goes in and cuts the logs down, sells them to the logging company, the logs on the truck are worth more than the standing timber in the woods, right? So they added value to the timber by cutting it down and turning it into logs. So they pay an excise tax at that stage. The paper company takes those logs and turns them into paper. All right, so they've added value to it. So the logs are worth more as paper than they are as logs. And so on and so forth through the manufacturing process. And so now you've got this cost that's added and added and added and added, and what tends to happen with a value-added tax is it cascades. All right, you end up, and by that I mean you end up, by the time you get down the train here, or down the line, you're paying taxes on taxes on taxes. And the record keeping is monstrous for that. And of course, the audit process can potentially be monstrous. And one of the other problems with it, and one of the big problems with it, is that by the time the product gets to the shelves in the store, and a person buys this $3 book or $30, whatever it is, he has no idea what the tax is. No clue. It's invisible. It's invisible. This is not added on the line. It's not a value-added tax on the line. It's a manufacturer's excise tax all the way through. I like the idea of visible taxes. The only way we're going to communicate how expensive government is for people to understand what the government costs them. We had a debate on the radio last week, a flat tax sales tax debate on the radio last week, and I was debating this, I forget the guy's name, and he was talking about the impact that citizens would have when they go to the grocery store and they see this 23% tax rate on top of their state sales tax. Well, people will be enraged. And my response to that was good. They ought to be enraged. They need to be enraged. This is out of control because people don't know what government costs them. You had your hand up, ma'am.
Just as far as the states collecting the sales tax, here in Illinois, the governor at one point in time, I don't know if he did this, somebody else in the room might be able to say, he threatened they collect the sales tax for the cities and municipalities, and then the governor said, I'm not going to give your share of that to you unless you approve of my policies. So what if the states went ahead and they collected the tax? I don't know if this is a good thing or a bad thing. The states, they collected the tax, and then they decided that they would not forward it to the federal government because they don't like their policy.
Well, that may give the states a little bit of leverage, but from a liability standpoint, from a legal liability standpoint, it's a very simple matter to craft the law to make the states liable to pay the money to the IRS, or to the federal government rather, to the Treasury. And then if they don't do it, the federal government has a claim against who? The state, not you. Not Jane and Joe American. They've got a claim against the state. So that's that's just an.
So is it a completely universal retail sales tax, or are there exclusions for things
All right,
like
you asking
food?
me my opinion now? Or the fair tax. My fantasy.
Yeah.
My fantasy system would be a comprehensive retail sales tax across the board on all consumption goods and services. No exemptions. You introduce exemptions, you introduce complexity. You introduce complexity, you introduce the potential for increased non-compliance. All right? Remember, you raise revenue by raising rates or spreading the base. What do? You spread the base. The broader the base, the lower the rate can be to raise the same amount of revenue. Across the board, all consumption goods and services. Are we getting the high sign here?
Yes.
Okay. All right, so I appreciate it.